almost live. We're live now. So welcome Facebook, Instagram, YouTube, LinkedIn. It's another Wednesday night. We're excited to be here with you for the good life. It's me and Stu tonight. You get the dynamic duo.
You.
That's right. How's your night going tonight, brother?
It's going great, man. I feel like we get these duos like every couple months, man. It's always nice just to come back to our roots here. For those that
Totally.
don't know, Chris and I used to have some bomb chats over at the TED Talks. This is nice to get on live and have these.
That's
But
right.
things are good, man. What about you?
Life is good, man. Life is good. Always a pleasure jumping on and sharing and having some thoughtful conversations around health, wealth, love, and happiness. Right, mindset, all the great things, all the reminders that we need to get us to the life that we want. Right. So, man, just got another exciting one tonight. For those of you that joined us on the pregame, and if you haven't, again, join us an hour before. We're live on Instagram for the pregame, where you just get a chance to hear us chop it up about whatever is on our mind at that time, because obviously we have no structure in the pregame. But then you get a chance to join us here now for the show, where we're going to do some different things moving forward over these next 3 months or so. We want to give you more value. We want to really educate more, teach more, give you more tangible things that you can take away so that you can continue to progress and get yourself to the good life. Like at the end of the day, when myself, Stu, Kabi, when we all came together and started having these conversations, it was really always about adding value. We're all coaches, right? We all work with people. We all have a heart for people. So we wanted to continue to add that value and give you value. And we know that you've enjoyed us. We've gone 35 weeks, right? 35 episodes, having thoughtful conversations, hearing Stu's point of view about a lot of mindset things, hearing my point of view and Kabiz's. And now outside of our point of views, we want to be able to give you practical things as well, right? Practical things as well that you can take away and actually implement into your life around those topics of health, wealth, mindset, happiness, any of those types of things, right? Before you go, though, on the bottom of your screen, Facebook, LinkedIn, YouTube, bit.ly backslash or forward slash email TGL. That is the link, bit.ly forward slash email TGL. That is our link to register for our email subscription, right, to our email list. We have a lot of exciting things coming up for you guys moving forward and into 2022, but we need your info. We want to reach out to you. We want to build community. We want to get you this information. So bit.ly forward slash email TGL. Make sure you guys go there and sign up so we can keep chatting with you. Now that we got that stuff out of the way, let's dive into the show. Like I said, we're going to really start giving more tactical, more practical things around all these areas. Tonight happens to be my area in the wealth building side of things, which, you know, couldn't be with us today, but I think this is the number one thing to focus on. Right?
And there's nobody to say otherwise.
Exactly. Right? He is not here to defend himself, and you will be on my side for the night, sir. Right? So this is the number one thing to think about is, right, and I was saying this in the pregame, the number one thing that really looms over all of us is our financial life. It's money, right? No matter how rich you are, how poor you are, wherever you fall in that spectrum, you're dealing with money on a daily basis, monthly basis, weekly basis, right? Your family needs it, you need it, companies need it to get paid, all types of stuff. Money is important, right? And so we have to talk about it more. We want to give you more practical things that are going to be able to help you build wealth. Wealth is one of those things that helps you design the life that you want. We can't get away from that. Tonight, specifically, we're going to talk about the topic that just happens to be, one, near and dear to my heart, but two, just happens to be the appropriate month, because September is Life Insurance Awareness Month. Okay? So September is Life Insurance Awareness Month. We figured we'd kick this off and kind of start our process on the good life of this educational part. We're talking about life insurance. And so let's have a bit of a conversation around it. Because honestly, Stu, how often do we get a chance to have a conversation around life insurance, right? Like,
Not much, man. Not much. What's been really cool is how you have been a big part of teaching me about some of this stuff. So it's been nice having you as a resource. So I'm definitely, I've already got my notepad here to learn even more about it.
I,
So
I appreciate it, man. And again, the only reason I do this is because I know that there is a lack of education. There's a lack of education. A lot of times in the money industry specifically, and we can talk insurance, we only get our information from our parents, our peers, coworkers, right? People around us. Maybe now the internet. The internet's playing a really big role in how we're learning. But even, either way, that only goes so far, right? That only goes so far. And we really have to have someone educate us about the most important basic financial vehicles that should be a part of everyone's portfolio, right? And that's life insurance. Life insurance, I've often said it, it's the foundation of a person's financial plan. It's the foundation because at the end of the day, you are a money maker. You're the money maker of your family. Whether you choose to work at a job, run a business, anything in between, you're the money maker. You are the entity that makes money for your family. Just like you have protection on your car just in case the car doesn't run anymore, right? You need protection on your life just in case you're not here anymore. You need protection not just for your life, it's for your income also, because that's what it's protecting. Right? I share this with a lot of people. And when we talk about this life insurance conversation, we just have to bring it into context because a lot of times we don't talk about money enough to really go down this path. But I try to help everyone through it. If you worked for 20 years of your life, and you made a modest income of $50,000 a year, make 50 grand a year, you do that for 20 years of your life, from age 20 to age 40. Right? 50 grand a year, no raises, you're good. Well, over that time period from 20 to 40, you just accumulated $1 million. 50,000 times 20 years, you just made $1 million. Most people in America will make $1 million in their lifetime. They won't keep it, they won't see it, but they'll make it, they'll accumulate it, right? Because again, it's just that simple. So the question is, if you're not here, if you pass away, right, tragic or just sickness, whatever the case is, obviously your family's out of the emotional side, right? The emotional loss out of a father, a friend, a husband, a sister, or whatever. But they're also out of your income and your ability to generate income moving forward. That's what we don't plan for. And that's one of the components that life insurance takes care of. Are you planning for the future earnings that your family could have in the event you're not here? And so this becomes where we start educating about it a bit more. But I'm curious, Stu, before I dive in and really dive in, how did you get to learn life insurance? Because everyone's story is a bit different. Like, how did you come across it? Did your parents teach you about it? Like, give me the feel of like how you got introduced to it.
yeah, well, definitely going to dive into that. Right before that, I want to just to kind of highlight how cool it was that you mentioned how this is not just to protect your life. Like typically we think about auto insurance protects your car. Your car gets totaled, you get a new car. You don't get a new life.
That's right.
But what you do get, like you said, is that protection of your income. So even if it's, even if for whatever reason, like you might be out of the game, if you've got people you're taking care of, like people that are dependent on you, like this is a really great way to kind of keep some of that coming in. So all of a sudden they're not really feeling lost, at least financially, right when that happens. There's going to be enough stuff going on emotionally. So it's I think it's really nice that you highlighted that piece as well. To answer your question, I remember I was not taught anything about life insurance growing up. Really, my parents weren't that big a deal, weren't really big into it. To them, life insurance was something that you kind of deal with after or at the beginning of retirement. You start thinking about that type of thing. I had this crazy friend of mine, Billy, back in like my early 20s that I hang out with, that kept talking about how great whole term life insurance was, and he was just going off. And I don't know, because of how like rigid I was with my teachings about finance from my parents and school, etc. I basically wrote this guy off.
Sure.
And he knows this. We still talk. But I think what was cool is when I started getting more open minded to having different income streams and running into you and having conversations with you, that's when I started to learn more and more about it. So really, it's been a pretty recent thing, and it was just by chance that I ran into a financial guy. So it's been nice to have these conversations with you.
Yeah, I appreciate it, man. But imagine all the people that are listening, and I know there's a lot that are listening that don't run into a financial professional, that don't get a one-on-one relationship, right? Or get a chance to ask the questions or learn the information. Like I said, the internet's been great. You know, there's a lot of great resources out there, but the problem with the internet is it's so much information that you actually don't know which way to go, even after you've right listen to the information. It's still kind of a little bit like mysterious about what is the right policy or how it works. You actually still want someone to kind of walk you through that process, because again, there's normally an undereducation there, so that's only natural. That's only natural. But now it's, who do you find, how do you get to that person, and then what is it that you need to even know, right? And so that's kind of what I'll take a little bit of time doing over these next 30 minutes or so, just kind of talking a little bit more about some of the basics, right? At the end of the day, always remember, ladies and gentlemen, that when you talk about money or you talk about any of this stuff, there's levels. There's levels. We said this on a previous episode a while back, but right, there's the 101 level, there's the 202, the 303, right? There's always going to be levels to our knowledge and our understanding. When it comes to this life insurance thing, I'm going to talk to you about the 101 level. The 101 level, because it's important to know the foundation, the 101 level. Then, can we start building on it? Yes, we can start building on it. We can start building on it, but you got to understand 101 first. All right. So, and by the way, mention what you said, Stu, right? For most people, that's how they think of life insurance, the way your parents think about it, right? Just, hey, when you get there, when it's time, right? It's kind of like the estate plan, future planning. We'll get to that down the line, right?
It's got a very dark vibe to it when you think about it like that.
Totally.
It's like, damn, the timer's running out. Now it's time to think about it.
That's right. Right. And it sucks because like that's the outlook a lot of people have on it. And that's why we have to kind of switch that perception and switch that the way that they see it, and think of it like income protection or protection for the things that they actually do want, not just on some, when you die, when you die, this is how it's going to work. It's like, all right, cool, I get it. But like, what does that really mean? So I'm going to do some different things. I'm going to share my screen here. For those of us that are watching on Facebook, LinkedIn, and YouTube, you're going to get a chance to see my screen, which should be pretty awesome here. And we're going to dive in. Awesome. Right? And let me see if I can do this. I don't know if I can, but let me see. We're always evolving and doing different things over here on The Good Life. So I want to make sure that everyone, Stu, can you see that? You can see that? It's a little small for you?
It's a little small, but that's only because we don't have the full window looking at it tomorrow. I feel like it'd be decent enough. Definitely interested in hearing some comments if you guys can read this.
That's right. I'm just gonna go full screen and then we'll make it happen anyway. Yep. And see if it gets a bit bigger. And let's.
And Instagram, you guys are going to be audio only for this. So if you guys have any questions about what Chris is talking about because you don't have the visual, drop a comment. We'll help you out.
Cool. So let's dive into some life insurance basics. So I always ask people this question. I always say, hey, when do we actually receive a life insurance education? Right? If you really want to think about it, when do we receive a life insurance education? It doesn't happen. It doesn't really happen too often. Like I said, we might learn it from our friends or our parents or our peers, but in general, we don't get it. So these are some basic things that you have to understand when it comes to life insurance. Things to know. Life insurance only deals with your age and your health, typically. Your age and your health, okay? So the younger you are, the healthier you are, the less you'll pay. The older you get, the more unhealthy you are, the more you pay. Kind of the way it works, okay? So just understand, in the way that you thought about it, Stu, the way your parents thought about it, that feeds into the insurance company's hands, because typically you're going to be older and more unhealthy at the time you're going to look for life insurance. So then you'll pay a higher premium, versus if you get it locked in early, age and health, the lowest that it's going to be, right? You'll lock in that premium for a longer time and you'll wind up paying less over time to the insurance company. And that is more of a win for us, for the consumer, right? For the people that own life insurance. So age and health is what it deals with. Now, it also deals with your criminal record and potentially your driving record too. They're just trying to figure out, how reckless are you, right? How insurable are you? How likely are you going to pass away? You have to think about this. Most people think about life insurance around the, $50,000 or $100,000. But these life insurance companies, people have $5 million life insurance policies, $7 million life insurance policies, $10 million life insurance policies. So if a company is going to say, hey, we're going to pay you $10 million, they're going to make sure you're not out here running willy-nilly, jumping off of buildings, driving 800 miles an hour, drag racing. They're going to make sure that like you're okay, because that's how insurance companies have to stay in business too. They're betting on the fact that you're not going to pass away quickly, right? They don't want you to, so they can get more of your premiums, and then they can, right, hold on to it, invest it, and don't have to pay out till down the line. By the way, for anyone that asked the question, because this might come up, insurance companies are the most solvent entities out there, right? Insurance companies, in order for them to even insure that life insurance contract, they have like a 5-to-1. They have to have a 5-to-1 reserve. So for every dollar they're going to insure you for, they have to have $5 in reserve just to loan that, just to insure you. So insurance companies are not going to go bankrupt. They're not.
Yeah, that's comforting.
Yeah, when people ask that question sometimes, like, oh, what if the insurance company goes bankrupt? I always ask, when's the last time you heard of an insurance company going bankrupt? Because it doesn't happen. AIG was one of the closest ones to going bankrupt back in 07, 08, and the government came and bailed them out. Outside of that, right, you got to remember, banks will go under before insurance companies go under, because the insurance companies, they cover the banks. They insure the banks. Right? So banks are just the middleman. It goes consumer, banks, insurance companies. That's why your money at the bank is FDIC insured, because if the bank goes under, the insurance company will make sure everyone gets there up to $250,000. Okay? So understand, when you're going to do life insurance with a company, they're looking at your insurability, your risk. Medical exams may be required. You may have to do blood work. They're wanting to figure out, hey, are we betting on this person passing away or no? Hopefully it's the longer, right? Like you're living longer, but they have to double check and make sure. I always tell people, all policies are not created equally. Being in this industry for some time, you'll hear people say things like, oh, I'm good, I got life insurance. Or you'll hear like people say, oh, my mom's got some on me, or my uncle's got some, or I'm fine, I got it through work. Right? They're very dismissive about the fact that they have it. But all policies are not created equal, right? Understand, you could drive a 2010 Toyota Corolla, or you could drive a 2021 Maserati, right? Like, they're both cars. They might both get you to A and B, but it's not the same thing. So same thing in your life insurance policies. $50,000 of final expense insurance is not the same as $1 million of living benefit term. It's not the same. So understand that companies work differently, premiums work differently, coverages, fees inside of the policy, they all work different. Just because you have it, that's a start, but it doesn't necessarily mean that it's top of the line, best model, fits you the best. That's why we always want to be aware of it and actually dive in to understand about these parts of our life insurance policy. And then I always remind people that proper protection is 5 to 10 times your annual income. Proper protection is 5 to 10 times your annual income. Because remember, this should go for this. One of the uses of life insurance is income protection. So if you take a year of your salary, let's say you make $100,000 a year, you should have anywhere between $500,000 to $1 million in life insurance protection. Because God forbid you were to pass away, that means your income stays in your family for the next 5 to 10 years. So they can figure it out. right? You can't expect your family to figure it out right after you pass away. You have to give them some leeway. You have to give them some time to grieve. Wouldn't you want them to have time to grieve? Wouldn't you want them to not have to just rush back to work and start paying the mortgage again and start paying the car note again and right, just get right back to it? You want them to, hey, mom, dad, we took care of this, right? Not here now, but now this income is replacing us. Stu, you follow this stuff so far?
I'm following it. I think the that 5 to 10 times your annual income is a nice piece there, because I mean, the more you have backed out, like as far as like if something were to happen, God forbid, then the more you have, like you said, the more time somebody has time to grieve, to figure it out, to maybe get a certification or an education or whatever, to be like, dang, I'm gonna have to make this happen for the rest of the family now, or we're gonna have to split this load. So I think it's a great point, and the age and health piece is huge. I mean, me having done that medical test the other day to get mine started per your recommendation, that's been big. And finally, the age piece. You know, I don't know how much detail you're going to go into. I know this is only the 101, but yeah, just like anything else, the sooner you start investing in it, the more benefit you're going to have. So it's pretty foundational stuff there.
That's right. You hit the nail on the head. And again, that's counter a lot of times what we're taught about life insurance. There's a culture out there. There's a group of people, right? Like there's people that may be undereducated, or maybe that's just their perspective. It is what it is. That believe that, hey, until you have kids, until you have something to insure, right? Don't worry about the life insurance part and push that down the road, right? Maybe you get it in your 30s. Maybe it's in your 40s, right? But there's a real societal kind of pull to say, don't get it earlier, get it later. And that feeds into the hands of the insurance company, and it sets us back. One of the things, and again, one of the toughest parts about being in this industry and kind of talking to people about it is I'm not a big fear-based person, right? I'm not a big fear guy. Like I try to push away from fear. But a lot of times, sometimes the messages we talk about when it comes around insurance have a little fear in them, right? Because we're trying to just let people know, like, be aware. And one of the things that people don't understand is there may come a point in time you're not eligible for life insurance. I hope people understand that. If you get cancer, God forbid, minimum 3 years in remission before a life insurance company will even look at you to get coverage. So if 1 in 3 people that we know will get cancer, if 1 in 3 will get cancer, and we are just waiting and prolonging until we get that life insurance, what's going to happen is we're going to have a group of people that no longer are eligible to get it. They might want to get it. They might know it's the right thing, but because they've waited until that time, now they can't. And that's what we're trying to avoid, because that's the last thing you want. You don't want to be able to want something and then you can't have it, right? And so that's why we have to have those conversations around all those topics. But again, that's some of the basics. That's some of the basics right there. The big question is, what happens if you lose the ability to make money? That's really what life insurance is there to do. What happens if you lose the ability to make money? You're the one that runs your household. You are providing. So if you lose the ability to make money, is there anything there that protects it? Is there anything that there? What about health challenges? What about disability? Like protection, insurance protection is about mitigating your risk. Insurance protection is about mitigating your risk. So do you have a way to mitigate your risk in the event you lose the ability to make money? That's what life insurance should be there for. Those are basics, because like we said, and like it says on this diagram, you can't see it Instagram, but basically what it says there is, right, you and your spouse or your partner, or maybe it's just you, holding up all of your life, all of your lifestyle, your bills, the groceries, college education, student loans, mortgages, all of it's being held up by however you make money right now. If all of a sudden one of those incomes or that only income goes away, what happens to all the other things, right? They fall off. There's no way to keep up the groceries and all that stuff, even if you just have $50,000 for burial. Okay, well, you get an extra $20,000. How long is that going to last your family? 3 months, 2 months, maybe, right? And then what do they have to do? What's the plan? So that's why we started educating about this stuff. Any questions on this stuff, Stu?
Nah, man, I think I'm all up to speed. I think
Word.
it's just such a good point about. I really can't emphasize it enough. Like, is no, not many people have these topics about death. Like there's a reason why so many people in our past and in history have spent time reflecting on death, because it's something that once you grapple with it, you don't have to be afraid of it. You can begin to prepare for it. This is a great way to prepare for it and make sure that somebody else is not just left dazed and confused on how to take care of the kids
Right.
when you're gone.
That's right. It's about having a plan. That's all we're trying to do. Common theme on the good life. Hence why we're talking about this. Like, how prepared are you? Do you have a plan for, right, what's going to happen up ahead? Well, obviously, we don't know, but we got a plan for it. So those are some basic things. Here's some basics on what it can be used for. I'm just going to put the entire list up there so you can see it. What can life insurance be used for? There's a bunch of different things. And again, I want us to know that, yes, burial and final expense is one way to use life insurance. There's a certain type of policy out there called a final expense policy for anyone that's older, over the age of 55, 56, 60 years old, maybe have some health concerns, health issues, might not be able to pass that medical exam. You can just get less than $50,000 in coverage from a final expense company, pay your monthly or annual premium. Don't worry about a medical exam. You just get covered. But that will only take care of burial. That will only take care of the final expenses. That's what people need if you get to the end or closer to the end and you don't have anything. Well, we need to get you some final expense. We need to get you $20,000, $30,000. Don't worry about the meds, meaning the medical application. Let's just get you covered. That's only one usage for life insurance. Another one is it can cover education expenses for kids. So many people, again, remember, this is about planning. So many people want their children to go to college. We've had the conversation on the Good Life. Doesn't matter where we stand about college, but if you are planning for your child to go to college and that's what you want, well, what happens if your income is not here? That's what we're asking. Okay, pass away, income is not here. Do the kids still get to go to college? Or now are all bets off and they got to get a scholarship? We have to really think about those things if you're planning for it, right? So that's what life insurance could cover. I've done this with parents. Again, it's up to you if you want your kid to go to college. But last I remember, and I don't know, Stu, do you know how much a semester is at like USF or like any local college?
So for me, I could pretty much compare back to Virginia. Um, I really know more of like tuition for a whole year.
Yeah.
And you're looking at, for a public state school, this was back in 2014, anywhere from 14 to 17 grand. And that's a good deal, because some of these private schools, man, like if you're really going for notoriety, you could be looking up like 30 to 50 grand a year. It's
Yeah.
wild. I know
Yeah.
people who are still in crazy debt because of that.
Yeah. I lived in Southern California. I'm pretty sure USC was 60,000 a semester. I'm pretty sure that's what it was. So when we talk to parents about this and you think about it, okay, where would you want your child to go to school? Let's say it's somewhere in the middle. Let's say you need 40 grand a year for your one child. That's $160,000 a year if you want to pay for their college. If you're going to plan on saving that, then you need to have that factored into your life insurance coverage. So that 160 you need in there, and that's for one child. If you got two or three, let's add that up, right? You want all of them to go to school? We're talking maybe 500,000 just in college. It's not to mention to pay off any of your debts. What about the mortgage? What about the debts you leave to your wife? The credit card debts? Those things, they don't go away, right? They stay with the family, especially if you're married. So the insurance should take care of that. It should pay for that stuff. After you pass away, financially, your family shouldn't have to worry about things for a period of time. That's what it should happen. So if you have debts, they got to get paid off. We've been talking about this a bunch tonight, but income replacement. If more people understood that this is how you protect your income. If you're ever scared of losing your income or your family not having it, just get life insurance protection. Just get life insurance protection, right? Supplemental tax-free retirement income. If structured properly, cash value life insurance can provide a tax-free supplemental retirement stream of income. If structured properly, a tax-free stream of income could be coming your way through a life insurance policy.
So for people that are considering life insurance, like what are some of the ways to structure that?
Yeah. So first and foremost, always sit down, like do this with a financial professional, with an insurance agent, with someone that's knowledgeable about this stuff. And it's funny because I told Stu this. Pick your agent wisely, because if you do move forward with insurance with them, you're stuck with them, right? So like you have to believe that they'll call you or they'll tell you the right information or they're reliable or they're trustworthy, or right? That stuff goes a long way. So again, back to all insurance companies and policies are not created equal. You can't just pick that guy and think you're going to get the best, right? So have some due diligence on that side. But how would we know is really we start to understand what are the types of life insurance. And I didn't put it on here, but we'll talk about it really quick right now. 2 different types of life insurance that are out there. There's term and then there's permanent, okay? So there's term life insurance and then there's permanent life insurance. Term life insurance is temporary insurance, okay? Temporary literally means you're gonna have it for 10 years, 20 years, 30 years. If you've ever heard, you get a 30-year term policy. If you're 30 years old, you have a 30 years of a window of coverage. After those 30 years, typically what happens is the insurance company will jack up your rate 10 to 25 times what you're paying. So like it skyrockets to the point that after that year that it ends, so let's say you have a 30-year term, on year 31, your payment might go from $40 a month to $600 a month the next year. Why? Because you're older, probably more unhealthy, and now you're out of the term and you're asking for the same amount of coverage. So it's going to basically rate you at the age you are and just skyrocket. So then that's term. What most people do on the back end is they'll cancel that term policy. But if you have just term, that's how it would work. Then the other side of life insurance is permanent. And this is where you have both life insurance coverage and a cash value savings. Okay? Both components are inside of a permanent life insurance policy. But inside of that permanent life insurance policy, there's different ways that that money can grow according to how the policies work. Most people have heard of a whole life policy, but whole life is just one type of life insurance policy. It's just one type of permanent policy. The other types that are out there are universal life, variable universal life, and indexed universal life. Okay? All four of those policies, they all work differently. They all fall under the heading of permanent life insurance. They all have different components to it. That's a 202 conversation. Just so you know, the differences between whole life, universal life, variable universal life, and index universal life. But understand that both of those have a cash value attached to it. All of those policies have a cash value attached to it. So you would think about these permanent policies as a way to get life insurance protection and a savings, and that savings will grow money. And according to the tax code, this is in the tax law, it's the IRC 7702. That's the official tax code, the IRC 7702, that covers the heading of life insurance in the tax code, that says that savings that's in there, right, is a tax-free vehicle. It's a tax-advantaged vehicle similar to your Roth IRA. Just like a Roth IRA, when you pull money out of that Roth, it's no tax reporting, right? It's a tax-free vehicle. Inside of your cash value life insurance policy, under that permanent side, tax-free, tax-advantaged money that can come out. So again, when structured properly, and that's why you sit down with a professional, when structured properly, that vehicle can work well for supplemental tax-free income. You have to put the right money in it first in order to get it out. But either way, people use that as a benefit for life insurance. That makes sense?
Absolutely. I think you kind of introduced me to this concept. Some of these end up acting, you work with the right person, figure it out. You can end up using some of these life insurance policies as one of your retirement vehicles.
That's right.
So you're really getting double duty. Like either A, you make it to retirement and you get the benefits, or B, you don't and you get the benefits.
That's right. We have a saying, it's funny, whether you live too long or die too soon, either way, we got you, right? Like if you live too long, you live to 100, like you got a cash value, right? You got supplemental income. You could just use it and right, be okay. You die too soon, you die at 41, right? Like your family's okay. Like either way you look at it, you're gonna be good. Now, a lot of times people don't always go down the path of cash value life insurance, since we're talking about it, for a few reasons. One, because there's a lot of confusion out there. There's a lot of confusion. There's a lot of miseducation. There's a lot of misinformation. There are people that think they know what they're talking about and maybe don't know what they're talking about, right? There's novice people in the industry. There's people that have agendas in the industry. That's the other side of things. You'll hear a very prominent name. I'm not scared to mention him here, Dave Ramsey, who pushes back against cash value life insurance. He only believes in term. He only believes in that side. He doesn't believe in cash value. And because he has a mass following, a lot of people buy into that thought process. They maybe don't know why, but they kind of just adapt it. And all I always try to teach people is there's a place for both. You can't swear off one side, because obviously these insurance companies know, like, someone needs this. Somebody does. Now, maybe not your demographic, maybe not Dave Ramsey's demographic of who he's talking to, even though I know some of them would benefit for sure. This is more about understanding what your options are. It's just about understanding what your options are, right? So back to what shows there on the screen, again, a couple other benefits as we wrap this stuff up. Creating an inheritance and generational wealth. That's something that would be done just by having life insurance. Also, potentially paying for estate taxes. You want to talk about the 202, you want to talk about the next level. Wealthy people, typically 10 million and above net worth, they use life insurance specifically for estate taxes. Specifically to say, hey, I have again, $10 million or above net worth. I have houses, I have businesses, I have assets, I have lots of things I want to pass down. But when I go to pass them down, there will be estate taxes. Well, life insurance, ladies and gentlemen, is the only way to pass down tax-free money. If you have a life insurance policy and you pass away and it's $1 million life insurance benefit, your family will get a $1 million check completely tax-free. No taxes taken out whatsoever. They don't have to report it or claim taxes. It's theirs. So wealthy people say, okay, well, I'll just insure myself for $20 million in life insurance. I'll pay the annual premium of whatever that is, so that when I do pass away, that 20 million of tax-free insurance money will take care of the estate taxes that I will need to pay in order to pass down to my heirs. So that is one of the things that you can use life insurance for, which is the estate taxes. Providing funds for charitable contributions. Another thing that I often educate people about when people say, I don't have family, I don't have anyone that I want to leave the money to. That's perfectly fine. Question number one day, do you think you'll have someone in your life? Because if so, if that's a goal or it's something you could see yourself having one day, back to age and health. If you just keep waiting until that time comes, you're going to be older, potentially more unhealthy, and then you're going to go get life insurance. So you might as well just get it locked in. Even if you never meet Mr. or Mrs. Wonderful, you never meet them and they aren't in your life, change those beneficiaries to a niece and nephew, someone in the family. If you have no one in the family, change it to a charitable organization. Change it to your favorite 501c3. Change it to the company that you wish you could donate more money to, but you couldn't. Put them as the beneficiary. You can do that. You can create a legacy that way. So again, That's what life insurance can be used for. And also creating a living benefit. This is a twist in the life insurance world, but you might not know this unless you sit down with financial professionals or insurance agents or someone that's in the world. But like, you can have a life insurance policy that creates a benefit while you're alive to take care of sickness. There's some term policies out there that add something called a living benefit, that if you get cancer, you have a stroke, heart attack, some type of chronic or critical illness, well, your life insurance policy will start to pay you out while you're alive. It works like a disability policy inside of your life insurance policy. There are companies that have that attached to it, where it's not just about passing away. It's about, in the event you get sick, are you covered too? And then the other side of living benefit is something called long-term care. One of the rising costs in retirement are healthcare costs. As we get older, we will have more healthcare costs. In the event you need hospice care, in-home nursing facility, someone to take care of you because you can't do 2 of the 6 daily activities of living, you could have a life insurance policy that pays for that. You're still alive, they're still taking care of it, right? You're still here, but that life insurance benefit now takes care of your long-term care needs as well. So now it's still not about burial. It's about, am I ensuring that my family won't have to pay for my nursing facility or that in-home nurse that I need? Because I don't know if you've looked at that, Stu. Everyone, like, a good nursing home is like, could be up to like 15 grand a month.
Are you serious?
Yeah. Like, it's not a cheap thing. Like, if you put grandma or grandpa in like the worst place, yeah, it might be 4 grand a month or something, like 3 grand a month. But like, you get to like where you have real care for them, you're talking 5 figures potentially, like a month. And people don't know that, like, that's the cost of it down the line. So what would it be like to have a policy that made sure you got life insurance in your 30s, right? You're good, you're set up. It's a permanent policy that makes sure that in the event you're 70 and need somebody to wipe your butt, right? you have it there. These are some of the benefits. Lastly, and then I'll let you jump in, Stu, the biggest benefit that I always mention is peace of mind. That's actually the benefit. The benefit is like, all right, and maybe you don't think this way, ladies and gentlemen. It's okay if you don't. But hedging and making sure that like you're protected in the event anything were to happen, you could sleep well at night knowing like my family's good. They'll be okay. I know I've left them funds, I've left them information, I've left them structure, like they'll be okay. And once you have that, peace of mind. Now you can go about literally building the empire, designing the life you want, the way you want, and have no regrets about it. Because in the event the worst happens, your family's still covered. Your business could still be protected. All those types of things, right? What do you got to say about that one, Stu? Like some of those benefits, did any of them pop out at you?
I think first and foremost, I did not have any idea long-term care and nursing homes, et cetera, was that expensive. So that's definitely a good way to cover that. But the very last one, peace of mind. Like we brought up earlier, how it's always chicken before the egg. Is it health? Is it mindset? Is it wealth? Which one do we prioritize for the good life? Well, when it comes to the mindset piece, a lot of the people I work with, and myself in past experiences, have had some type of interaction with anxiety, like just fear of the unknown, of the future, whatever. And what Chris is getting at here is, man, you begin if anybody out there is worried, like, shit, like I'm the provider, or I'm one of the 2 main providers, or whatever structure you have in your household, and you're really worried about what happens after you're gone, this null and voids that from the financial structure perspective. Obviously your influence, your care, your love won't be as present, but at least there's something that you can leave behind. So to me, this has always made a lot of sense. I just haven't yet pulled the trigger. With Chris's help, I'm well on the way to doing that.
And it's all right too. I was gonna say, like, most people don't pull the trigger out. Most people know its importance, but never really kind of get around to it or have the conversation. Like, it's there, but it's right. You have to be introduced. You have to have the conversation. It's why when I dive into what we do on the financial side, I always talk about just having money conversations. That's where it all actually starts. I'm giving you guys knowledge. We're dropping right this knowledge and this information. Maybe you're taking notes, maybe you're not. But like at the end of the day, this is really about you just saying, okay, I'm aware of these things, and now I know someone that can give me information. I can get the information, and now I need to make a decision of what I need to do to make sure my future is protected, my family's protected, my income's protected, any of the things on here that might stand out to you. That's really what it is. It's just saying, hey, that's something I think about. Do you think about long-term care? Do you think about potentially getting sick and somebody needing to take care of you? Well, then here's a way to protect that. Yeah, it's some money out of your pocket, but is it worth it? We pull money out of our pocket all the time for things that we feel are worth it. You just have to figure out, is it worth it? And ultimately, is peace of mind worth it? Now, whether you feel like it'll give you that, that's your call. But I'm telling you, would you pay? What would you pay for your peace of mind? To just know, like, in the event, like, everyone's good. I did what I needed to do. That's priceless. You know what I mean? Like that's, and honestly, it can be done for cheap. It could be done for minimal, right? So those are some basics. And this is where I'm going to wrap up. I'm going to leave you guys with some frequently asked questions, some things that you might hear or, right, I've heard people ask a bunch. First thing, how much coverage should I have? We already went over that, 5 to 10 times your annual income. But really, it's as much as you feel like is needed to take care of your family if you're not here. And the average life insurance company will give you up to 20 times your annual income in life insurance. The average life insurance will approve you for up around about, and some are different, but the average company about 20 times your income. I'm only telling you proper protection is 5 to 10, but an insurance company will potentially approve you for up to 20. So get as much as you feel like your budget can handle and as much as you feel like your family will need. That's it. So that's how much coverage you should have. That's an easy one. But I will say, if it's under that 5 times your annual income, if it's under that, then you're underinsured, right? If you only have $100,000 or you only have $50,000, you're underinsured. If you're older and you can't get more, understood. But if you're under 50, you should probably have more than that in life insurance if it's important for you. And if it fits the budget, like I said. Second one, best coverage for a child. This is my personal opinion. We're just talking about life insurance coverage because a lot of people want life insurance coverage for their kids, okay? Depends how much a parent is willing to put aside for their children. Because when you talk about life insurance for children, they're primarily meant to accumulate cash value. You're not really going to care if your child has $1 million of life insurance protection. So actually a little selfish the way, if you really want to think about it, right?
Oh man.
Right, exactly, right? It's a little, right? And I try to educate people about this too. I'll tell you, Stu, especially in the Black community, you hear this a lot. You hear adults say, get some insurance on the kid, but the parents don't really have coverage. It's because they don't necessarily understand how it works. And I always have to break it down in layman's terms, and it's really harsh to hear as parents, but this is what you're saying. If you only have life insurance coverage on your children, your kid has a $20,000 policy, but you don't have anything, you just have what's through work or whatever, or the grandparents have it on them. Really what you're saying is, okay, child, if you pass away, I'm going to be okay. I'll be able to pay for your burial. You'll be fine. But if I pass away, you're not going to have anything. That's what you're saying when you say I cover the children and I don't cover me. So if you do ask, well, what's the best coverage for the child? Most people, a lot of people go with Gerber life insurance policies. They're a form of a whole life permanent policy. You can pay a very little bit amount, right? $10 a month, $3 a month, whatever, if you get it young enough. And it grows a little bit of cash value, but you got to think about it. If you're only paying $10 a month, how much actually goes into the cash value? Because some of it has to go to cost of insurance. So maybe you got $4 a month going to cash value. So now you're saving $50 a year for your child. It's not going to be a lot. So according to how much you want to save as a parent, put it in a cash accumulating life insurance policy, specifically an IUL. And IUL is meant for cash accumulation. So that would have more benefits and more cash benefits than a whole life policy would for that child. But to each his own, it's really about that parent. Third question, frequently asked questions. I have coverage at my job. Is that good enough? Is that sufficient? Short answer is no, it's not. I can expand on that a bit, but just understand, first off, when you're at your job, typically you only have 1 to 3 times your salary in life insurance. So right there, if we go off of our rule of 5 to 10 times, you're already underinsured just by the nature of having it through your job. Because most jobs are not going to give you 5 or 10 times your income in life insurance. So
if you were to go off, I'm sorry to interrupt. If you were to go off and create your own life insurance policy, does that add to or negate anything happening with your job insurance policy?
Nope, not at all. You can have as many life insurance policies as you want. And if the more that you have personal, the better. Because the job insurance is just kind of like icing on the cake, right? It's just like extra. Okay. But understand that also the reason why it's important, back to the age and health thing, is because maybe you plan on being at that job forever. Maybe you don't. But as soon as you leave that job or they choose to get rid of you, no more life insurance. Life insurance doesn't just carry over with you like health insurance, or like you could do COBRA. Life insurance doesn't do that, because remember, they need to insure you as a person. If you no longer work for that job, they weren't insuring you. You never took any blood work or medical testing. They were just insuring your position at your job. So as soon as you leave that job, no more life insurance. They don't cover you. They might offer you the ability to get it, but then they're going to hike up your rate. They have to do a medical test. They're going to go for age and health, and then they're going to rate you where you are. So that's why it's not sufficient, because in the long run, you're not going to be at that job forever. And so then you're going to lose your life insurance and it's right back to square one. So make sure you get something more than the job. And then lastly, should I wait until I'm married or have dependents? We kind of already talked about that a bit. You can, but the longer you wait, the more you're going to pay. That's basically it. The longer you wait, the more you're going to pay. So at the end of the day, ladies and gentlemen, get covered now, sooner rather than later. Get educated now, sooner rather than later. For those of you that know that this is something that's important for you, talk to someone now, sooner rather than later, because this is one of those things foundationally that's going to help you build wealth. If you're not here, you're probably not setting your family up properly to make sure that they can build wealth, unless you have protection, unless you have insurance. Because otherwise, right, if you go, that business you're building goes too. It's not just going to keep flowing. So that's something we got to be aware of. Do we have any questions in the comments? Are there any questions? Anybody have anything? I don't think so. I don't think we have any. Let me stop sharing my screen, and we're going to dive back in.
And we're back.
And we're back. We're in. Hopefully people got something from that. And again, that's a 101 level conversation. This is a 101 basics of life insurance. Basics. There's so much more we can expound on. There's so much more we can build on. We didn't even talk down the cash accumulation side. We didn't talk the tax-free nature. We didn't talk an index strategy. We didn't talk the different, right? If you want to talk a little bit higher level, why does Dave Ramsey not deal with cash value? Well, he believes in a theory called buy term, invest the difference. So you buy term coverage, 10-year, 20-year, 30-year term, pay as little as you can for the coverage, right? And you take your dollars and you invest them somewhere else. He recommends mutual funds or Roth IRAs, like most people, right? But either way, you're just investing it in the stock market normally is what you're going to do, or some other investment, paying off your home, however Dave Ramsey looks at it. But that's a strategy. Buy term, invest the difference. Limitations of that strategy. Only limitations is one day your insurance coverage will run out. That's the nature of term. Okay? So just know when you step in there, at some point, the goal is to be self-insured. As Dave Ramsey would tell you, the goal is to be self-insured. The goal is to just have term, and then by the time you're done, you should have $500,000 in the bank that you could pass down anyway, that'll take care of your liabilities, all that good stuff. If that doesn't happen, which is the goal, you're kind of out of luck, right? Because now you're out of term coverage. You probably didn't get yourself savings and investing the way you should. So now you aren't self-insured. And now if you go back to get life insurance, you're only going to get less than 50,000 in coverage because you're older, and you're probably struggling on the retirement front. So, right, the stakes are a lot higher on that side with buy term, invest the difference. It's a strategy. It works. Right? It can work for people, but the stakes are higher because if you mess it up and you don't become self-insured in those 20 years, 25 years, 30 years, if you don't build it, God forbid you get a sickness, God forbid you have a job interruption. If any of those things happen, you're losing the term coverage, you're pulling out of the investment, you're starting over, and then you get to 65 and you don't have coverage. Permanent side could clear up a lot of that stuff. Yes, it's a higher premium. Yes, there's some fees inside. People, right? The downside of cash value life insurance, people always want to say, well, it has fees, higher fees. Every investment vehicle has fees, depending on the company. Some can be higher or lower. But at the end of the day, you're paying for life insurance too. It's not just a straight mutual fund where you're just paying for a container and some investments. You're paying for that $500,000 of coverage, that $750,000 of coverage. So God forbid you were to pass away, the insurance part on the front end takes care of your family. That's what you're paying for. And when people start to understand it that way, you can have a different conversation and really evaluate. You don't have to take Dave Ramsey's ideology about how you look at it. You could evaluate it yourself and see, well, what's best for me? And that's what we want to come do. That's what the show is about. It's empowering you to get to that place where you can make these decisions for yourself, these financial decisions, these health decisions, these mindset decisions, all these decisions. You need to take ownership and make them for yourself once you have the information. Right, Stu?
Amen, dude. Amen. The ownership piece is always rings out so true here. And you can't control when or where we're going to pass. But there are certain things you can have lined up to make it easier on those that depend on you. This seems like one of them.
Absolutely, man. Absolutely. And that sounds like a great place to put a nail in this one for this episode 35, getting into this new format where we really want to teach. We really want to educate. We are three smart gentlemen in our fields, maybe not in other fields, but in our fields, right? We know what we're talking about. We want to help. We want to empower. We want to add value. So we want to be able to make sure that we're sharing these things with you and that you're picking them up and asking questions and then applying them. Tonight, we happen to have a conversation about life insurance, which is great for the wealth building side of things. I'm not sure. Do you know what we're doing next week, bro?
In about 2 seconds, I will.
You can find out because we got this planned out for you. Like I said, we're making sure that we're adding enough value. We're giving you all the things you need. What do we got going on next week?
Next week is the top 5 ways to invest in your health.
Woo! Kabi is going to come strong next week with the top 5 ways to invest in your health. We're going to teach, take notes, invite your friends, like, subscribe, share, all that good stuff, right? Make sure you do all those things. You'll see the banner below, bit.ly/email TGL, the good life, email TGL. Get on our email list, stay in contact with us, let us continue to feed you some of this information as we move into 2022, which is going to be an amazing year for all of us and all of you guys. So we just want you to be a part of it. We want you to, again, benefit with all this information, right, Stu?
Amen. I mean, like, we're here to help. We don't get any interaction or any direct, not interaction. We don't get funds directly from doing this. We're literally here just trying to provide value. Many of us offer free consultations, myself included. So, like, use these opportunities. You can reach out to us on here, especially in the pregame if you want to have even more of our attention. You can reach out to us during the good life itself, through comments, etc., or you can hit us up on our email list, whatever. Just there's no need to go it alone with some of these topics, guys.
So true, man. So true. We want to help. So until next week, guys, hey, enjoy the week, live the good life, continue to design the life that you want. We'll jump back on next week, have a conversation about your health. Take care, guys. Have a great one.
Take care.